Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillahirrahmanirrahim. Alhamdulillah rabbil alamin. Wassalatu wassalamu ala ashrafil anbiya wal mursalin wa ala alihi wa sahbihi ajma'in. سمحت أنا سأقدم باللغة الإنجليزية.
No problem, no problem.
Are you going to share the slides or do I share myself?
If you want, try first to share the slides. If you don't get to share the slides, we will share it.
I prefer you to share the slides.
يقول لي صاري الآخر صاري يقول لي partage. Okay, doctor, just few moments. نعتذر فقط ثواني فقط. سوف يقوم المقرر بمشاركة العرض.
البريزونطاسيون تاع استاذه منى.
دكتور ساري من فضلك الدكتورة
This is not my slide. It's okay. Let me introduce myself first. As mentioned by Dr. Iman, I'm Morjan Muhammad. I'm from ISRA Research Management Center of INCEIF University. So my presentation today will be on the role of Islamic fintech in financial inclusion and the case of Malaysia.
Okay, doctor, I will give you the steps in order to share the presentation. So just open the presentation in your lab.
Yeah.
After that, go to sharing the presentation. Just beside the hand, below the screen.
Okay, can you see now?
Try to, okay, it's okay. So you can start, doctor. Thank you so much for you.
All right, okay. So, first of all, I would like to thank the organizers, especially Farhad Abbas University of Satif, for organizing this important conference, which is very timely, and also for inviting me to be part of this session. So, in terms of contents that I will present today, there are a few things that I would like to highlight. First, on the overview of Islamic fintech industry in Malaysia. Second, the state of financial inclusion in Malaysia. And finally, financial inclusion via Islamic fintech. First, let us look at the overview of the Islamic fintech industry in Malaysia, whereby we will look at the facts and figures, as well as what are the latest development and initiatives related to Islamic fintech as well as Islamic fintech in general. So let us start with some demographic information of Malaysia, whereby Malaysia is considered as the 36th largest economy in the world. And then in terms of the gross domestic production, our growth is at 3.1%, but this is the figure in 2021. And then the total population that we have is 32.7 million. And then the GDP per capita is 45,874. And then with regard to number of banks, we have 44 banks, but then Islamic banks, we have 16 Islamic banks, in which 5 of them are full-fledged Islamic banks, and the remaining 9 are subsidiary of a conventional bank. In addition, there are also Islamic banking services offered under Islamic window by conventional banks. So this is basically monthly income. Their monthly income is below 5,000 ringgit Malaysia, which is about 1,000, 1.1 USD. Next is in terms of the fintech landscape, how Malaysia has progressed in terms of fintech. We can see that total number of fintech companies that exist in Malaysia is 294, ranging from different types of companies and firms, starting with payment, digital remittance, providing artificial intelligence services, and then becoming marketplace, providing lending as well as digital banking, insurtech, blockchain, cryptocurrency, wealth management in a form of wealth tech, crowdfunding, as well as RegTech, regulation technology. And then on top of that, we also have several companies which are full-fledged Sharia compliant, in which coming from crowdfunding platform as well as e-money providers, digital investment management providers, and also some of them offering halal payment and so on. So these are basically the overall dashboard of of fintech in Malaysia. Next is we can look at the growth of internet and mobile banking landscape in Malaysia, whereby as at 2022 April, we can see that mobile banking and internet banking has surpassed the cash withdrawal through ATM machine. So the internet banking constitute 126.2% of the total population, and then mobile banking constitute 76.4% of the total population. So in total, we have more than 200. I mean, for each we have 39.3 million subscribers for internet banking and 25 million subscribers for mobile banking. What differentiate between mobile banking and internet banking is that internet banking is not necessarily, is mainly using web, whereby mobile banking using mobile phone via apps. Because in Malaysia we do have several Islamic banks, several banks which offer mobile apps banking services. Then in terms of, we continue with the digital payment, whereby digital payment continue to grow in Malaysia. In terms of the volume, we can see that in 2021, over 7.2 billion transactions were made with electronic payment, in which it grows about 30% year on year. And then in the same year, we have an average number of e-wallet payment transaction per capita, which stood at 64.5. And then digital payments became mainstream during the COVID-19 pandemic. So despite all the setbacks of COVID-19 pandemic, as we all know, and it has been acknowledged in various references, there is reports that COVID-19 has accelerated digital digital growth in different countries. So Malaysia is included in that case. As you can see over here, the transaction volume of e-money and internet banking becoming more and more during the COVID-19 period. So those are the two digital payments that have been accelerating during the COVID-19. In terms of latest development, digital development and initiatives, as I mentioned just now, COVID-19 has accelerated digitalization in Malaysia, with digital platforms and services helping to reduce the economic, social, and health costs of the pandemic. So some key Malaysian policy documents have already stressed on the importance of the digitalization to achieve the country's development objective. Among them, we do have our latest plan, country plan, national plan called 12 Malaysia Plan, which is valid until 2025. Second one, the government has developed Malaysia Digital Economy Blueprint, which is spearheaded by Malaysian Digital Economic Corporation, MDEC, if you are familiar with the name. It was developed in 2021. Then it was further supported by Public Sector Digitalization Strategic Plan, valid until 2025 as well. And then in terms of the Capital Market Master Plan, the regulator of the capital market has developed another plan which is valid until 2025. And then Financial Sector Blueprint developed by the Central Bank, which is valid until 2026. So all these policy documents have stressed and have emphasized on the importance and the role of digitalization and technology in supporting the growth and development of the country. Specific to the regulatory frameworks to financial sector, we can see that the capital market regulator, which is called Securities Commission Malaysia, has developed a few guidelines and framework, including guidelines on recognized market. What is called recognized market? What recognized markets here refers to those markets which offer their services using digital platform. And then Securities Commission also introduced Digital Investment Management Framework, or what we in other countries it is known as robo-advisory management, robo-advisory investment. So, and in addition to that, Malaysia has already issued guidelines on digital asset to regulate cryptocurrencies and crypto and other types of digital assets. On top of that, Central Bank of Malaysia, Bank Negara, issued licensing framework for digital banks and also licensing framework for digital insurers and takaful operators. And in terms of latest development for Islamic digital banking, as of April 2022, Bank Negara Malaysia announced 5 successful consortia awarded with digital banking license, in which 2 of them are Islamic digital banks. So these banks will start their operation within 1 year from last April 2022, until they were being given 1 to 2 years to prepare themselves and then to make sure that they have all the capabilities and capacities to offer the Islamic the digital banking services. Apart from that, we can see as well incumbent Islamic banks or traditional Islamic banks, which are also offering digital banking solutions under their existing banking license. So we can see that the first Islamic bank in Malaysia, which is Bank Islam Malaysia, offering their digital banking solution via BU. And then Al-Rajhi Bank Malaysia also started offering their digital banking solution via RISE. So all these are being offered by Islamic banks which have got their conventional or traditional banking license. And then in terms of the Islamic capital market and Islamic capital market sector, there are various infrastructures that Securities Commission Malaysia has introduced to facilitate digital investment. These include setting up of the digital asset exchange, whereby it is an e-platform to facilitate digital assets trading. So far, we have 4 registered digital asset exchange. And then also there is establishment of initial exchange offering, which is an alternative channel to raise fund via digital token issuance. So this exchange, they raise funds using token. There are 2 registered initial exchange offering, and then in terms to facilitate as well the digital asset exchange and initial exchange offering, the regulator has also set up digital asset custodian. And then apart from digital asset, there are also digital services, in which this means there are a few online providers like e-payment providers, e-wallet and e-commerce that can distribute capital market products via a collaboration with the holders of capital market services license. This means these e-platforms, these online providers, although they do not have capital market services license, they can partner with the existing holders of capital market license providers to offer different kind of e-services. So there are currently 2 registered e-services, which include Touch and Go Digital as well as Versa Asia. So as I mentioned just now, digital investment management is being offered in Malaysia. So this is the company that offer automated discretionary portfolio management services to investors via innovative technologies. So there are currently 8 licensed digital investment manager, and one of them is Islamic, which is Wahid Invest. And then I think what differentiate Malaysia from other countries, we have the Sharia Advisory Council of Securities Commission. They issued a resolution in July 2020 permitting trading and investment in digital assets, which are offered on registered digital asset exchange that fulfill Sharia requirements. So that was basically a landscape on the fintech. Let us move to the state of financial inclusion in Malaysia. Some, based on the definition given by the central bank, what we mean by financial inclusion in Malaysia is that the provision of suitable, affordable and quality financial services to all segments of society that contributes to a balanced and sustainable economic growth and development. So in terms of what are the framework that the central bank has developed in order to promote financial inclusion in Malaysia, is that in 2011, the central bank has developed a framework which include what would be the vision and then what are the desired outcomes of this financial inclusion framework. And then the framework also identifies what are the key enablers and then broad strategies to achieve those key enablers and desired outcomes. So this framework was developed in 2011 and then extended until 2022. So from this framework, the key enablers which is important in order to achieve financial inclusion is technology and talent, data measurement, strategic partnership, as well as proportionate regulation and supervision. So back in 2011, it has already been emphasizing, the government and the regulator has already emphasized on the role of technology, but then at that point of time, it might not be as advanced as what we have now. So in terms of initiatives that has been developed and the outcomes from those financial inclusion framework and strategies, there are several initiatives that have been undertaken. Among them is the implementation of comprehensive agent banking framework, and then also expanding financial products and services to meet different needs of the underserved segment of the community. And then also to enhance the role and capacity of development financial institutions, because in Malaysia, we do have two types of financial institutions. We have commercial institutions as well as development financial institutions. So main objective of development financial institutions is to promote financial inclusion among startup companies as well as small and medium enterprise companies, as well as the underserved segment of the societies. And then among other initiatives, also to strengthen monitoring framework for financial inclusion initiatives and outcomes, and then enhance the knowledge and capacity of the underserved. So from all these initiatives, what has been achieved is that we can see significant improvement, first in terms of access to financial services. The access to financial services improved significantly from only 46% in 2011 to 69% in 2022. And then population living in sub-district with access to financial services, it also increased from 82% to 99%. And then customers with active deposit accounts also improved from 87% to 96%. These are all during the same period. So as at 2022, we can see that different indicators of financial inclusion in Malaysia. So take, for example, like the number of agent banks, it increased from only 460 in 2011 to 3,829 in 2022. And then what we can see here in terms of number of ATMs, whereby it decreased now from 2011, the total was 11,000 plus, but then in 2022, the total is only 8,000 plus. So this commensurate with what I presented earlier, whereby the internet banking and mobile banking penetration has increased, hence the lower use of ATMs for the transaction. And also we can see that the number of deposits account has increased from 63 million to 77 million plus. And then adults with active deposit account also improved, as I mentioned just now, from 86% to 96%. And then in terms of access for financing or loans, the number of loan account also improved. And then the total adults with loan account, which includes both Islamic and conventional, increased from 37% to 40.6%. The same thing with access to insurance and takaful, whereby adults with life insurance and takaful policy increased nearly 100% from 29.6% to 57.5%. So the e-payment, as we mentioned just now, increased significantly from
Sorry, Dr. Muhammad.
All right.
You have 2 minutes more.
All right. Okay, sure. But then, although with all the development, still there are different challenges and barriers to financial inclusion in Malaysia. Among them is digital financial services, where the reliance on cash and traditional banking services still prevails. And then also the take-up of insurance and takaful. As we can see just now, only 47, although significant increase, but then it constitute only 57% of the total population. And then innovation in products for underserved segment. So that narrow definition of unserved and underserved, focusing on availability of physical access point without looking into digital and innovative financial solutions. And then also in terms of financial awareness and education. So then how to address all these issues? What the government has introduced is to introducing renewed financial inclusion framework, in which more focus on the digital financial services. So the desired outcome of this renewed framework is, first, offering more access to affordable and suitable financial products and services. Second, promoting responsible usage of financial products and services. Third, financial innovation that delivers value for all. And finally, financially capable consumers with good financial health. So now, if we look at all those initiatives and how to combine those initiatives in order to promote financial inclusion, we can see that I just take one example from the crowdfunding, whereby the crowdfunding in Malaysia has accelerated, whereby as at end 2022, there were 10 registered equity crowdfunding and 11 P2P platforms, of which 2 of them are Sharia compliant. So we can see that as at September 2022, there are various campaigns being launched for both equity crowdfunding and P2P. And then the successful issuers we can see over there, 298 for equity crowdfunding and more than 6,000 plus for P2P. So we can see that the average group that subscribe to this crowdfunding platform is among the millennials, which is those who are below 35 years old. And then these are some data on the total amount raised by equity crowdfunding platform as well as P2P. We can see some of the hiccups here is that the concentration on certain platform providers, it is not being averaged out among all other providers. The other example is that charity crowdfunding, whereby we can see that alternative online fundraising platform to accelerate Islamic social finance agenda has already been undertaken by Islamic banks as well as charitable organizations. We can see that 2 main initiatives being taken up. One is Wakaf-based crowdfunding, whereby a consortium of 6 Islamic banks collaborating with State Islamic Religious Council, establishing a digital cash wakaf platform. And then also a few Islamic banks establishing digital crowdfunding platform in order for them to finance various projects for unserved and underserved community. So moving forward, how to accelerate financial inclusion via Islamic fintech? As we know that in order to have a comprehensive framework, we need to develop an inclusive, dynamic, and safe digital economy, which prioritize five policy areas. One is on the digital infrastructure, digital platform, digital financial services, digital literacy and advanced digital skills, as well as digital safeguards. So all
Sorry, Dr.
these,
Muhammad, can you please
yeah,
summarize and go directly to your important results?
yes, this is the final slides that I have. So the importance is that this should be made available and accessible to all areas, and then this should be included in advancing the framework for open data and enhancing the use of the available data. So with that, I thank you very much for listening. With that, Assalamualaikum warahmatullahi wabarakatuh.